Okay, I'll try to be quick, guys. So, wheat, look at that. Is there going to be supply issues? Possibly price gains? Sugar? Yes. Look at the oil to petrol ratio. Boom. Big difference. Refining capacity down, oil supply up. Thank you, war in Russia and Ukraine. Refiners have been attacked, and therefore Russia's refining capacity is reduced. So petrol, boom, prices go up, and a lot of the refineries are old, and I think there's new sulfur requirements. So they can't use some of that oil as well. Some of them have to use old oil, so it's getting expensive. Insurance on ships, security risk in transport. So petrol, yeah, boom, 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 boom. They're making money. The refiners are making money because all that is going to their margins. Because I don't know if you've looked at the price of petrol, but bam. So look at companies that are refiners, undervalued refiners. Coal. What about coal, people? Coal, we're gonna need coal. Like, coal makes lots of other products, especially coking coal. We need lots of coking coal. We need copper, copper. But silver decoupling, people are learning that silver is actually quite useful. So the price ratio to gold, boom, silver's going up compared to gold, and gold's going up, so silver's going up. So if silver's going up compared to gold, then buy silver instead of gold. And healthcare. They're rotating from tech stocks into healthcare. Next pandemic or something's coming for healthcare. And it's also undervalued. But yeah, it's money doesn't just disappear. So the market's not going to crash. Maybe sections of the market, like tech, are going to sputter out and crash. Maybe. But where are they going to put their money? Bonds becoming worthless because the government's pumping ridiculous amounts of bonds out. All the governments are in debt. Companies are left. How much debt are they in? Banks are left. How much liquidity are they in? Assets are left to trade with the never-ending supply of money. So there's a limited amount of assets, unlimited supply of money. So shares are basically money, real money, that goes with the flow of the GDP in the whole economy. So it's a share in the economy if you own shares. Because it's a share in the company's earnings of profit. But if it goes bankrupt, be very careful what you buy. Because if it goes bankrupt, shareholders don't get paid anything until everyone else has got paid. So workers first, then debtors, and then sometimes the bank gets paid before workers, but then but the shareholders last. That you're an unsecured creditor, but you do have voting rights. But unfortunately, because most shareholders are just ripping the crap out of these companies, uh, they're not long-term sustainable, those companies, because the price has gone ridiculous, and so the dividend payments are not good. It's just all speculation, but there's still payments in dividends, and that's where the shares are at. dividend payments, because it's like you don't have to sell it, you can loan against it, but you're still collecting money for owning it. So that's stress-free. You don't have to run with the cyclic movement of momentum in the short term. No, you're looking at just undervalued, mathematically calculated, low-risk companies. Or slightly higher risk, but they're lower risk because of their stance or something. There's lots of variables, but it's all just maths. And I do it in my head, and spreadsheets, and just the calculator on my phone. And then I'm just like, okay, yep, that's paying good dividends and that's underpaid. So instead of buying gold or silver, buy a mining company that pays dividends, or buy the physical asset just in case we get really bad and we start trading with gold or silver. You want to be able to chop it up into small pieces. Have about $10,000 worth of gold or silver. That would last you 3 months. But because you're working and everyone's paying in gold, you'd get it back. So if everyone had $10,000 in gold, that would be enough to trade a full cash, gold, cash economy. So just think about all the different things. Don't get stuck on the manias like Bitcoin and that. There's no dividends and people lose their money on those things that do pay dividends, where if you figure out how to put your money on an exchange to earn money, they're lending it out. And what if they crash? What if they liquidate? What if there's too many questions in crypto? It's just too volatile. It's not traditional. And if they're going to tokenize everything, do you realize traditional's going to go through the roof, because the tokens are going to be based on traditional. So traditional is going to get a bucket load of money from tokenization. So why not just buy traditional, but dividend paying? So don't buy bare metals, buy a producer. Don't buy gas, buy a producer. Don't buy oil, buy petrol. Producer. Don't buy petrol, buy a producer. Okay.